Ladies and gentlemen, good morning and a warm welcome to the presentation of the Sika results 2013. I'm happy to see you all here. I will give you the highlights of 2013, and after Adrian Wittmer will present the details in the results in more detail. Then I will come back with our strategy 2018 and the outlook for the ongoing business here. We had a very exciting year 2013. I'm very happy with what our employees delivered in all our markets. We had for the first time sales of over 5 billion Swiss francs, and also we had record numbers in all our key financial indicators, from the operating profit to the net profit to the operating free cash flow. We are very happy also to see our growth momentum, which picked up throughout the year. As you remember, we started very slow in the first quarter of the year, and then we had an amazing growth momentum in the following months and quarters. We grew in all regions, even in Europe with some crisis market we could grow. And of course our growth engine, the emerging markets, in our case, did not lose any speed. We finished the year with over 17% growth in local currency, and despite all the currency devaluation in some of these markets, even in Swiss francs, we were over 11% sales growth in Swiss franc in these emerging markets. So we are very proud of our numbers, I think, of what our people delivered around the globe for 2013. Maybe even more important than the numbers, I think, is the investments we did for the future of Sika. We opened 10 new factories in the growth markets around the world. This is a record number. We never opened 10 factories in 1 year. This is our commitment to our growth strategy. Also, our research and development departments around the globe worked with full force. We applied for 73 new patents, and we introduced new products in all our target markets. Last but not least, we had 5 acquisitions completed in 2013. This was one of the most active years regarding acquisitions for Sika. And to put all this together for the future, we have defined our strategy 2018, which we will talk about later. Some details: when you look at our profit and loss statement, we have a very nice through flow here from the growth in Swiss francs of plus 6.5%, and based on the increase in gross margins which we could achieve and our disciplined cost management, the operating profit increased by 20.9% and the net profit by 23.8%. Very important for us also the free cash flow. Here, with the high net profit, we also achieved a lowering of our net working capital, which gives us a record result here in the operating free cash flow of 432 million Swiss francs, which is a plus of 43%. Want to share some reports here with you regarding our regions. As I said, we are very happy we could grow in all our 4 regions. Even in Europe, we had a very nice growth here, partially driven by the acquisitions, but also we had organic growth here in Europe, Middle East, and Africa. Very happy to see that the crisis markets in Spain, Portugal, and Greece, they have bottomed out, and we are confident that from now on we will also see growth in these markets. We have maybe new crisis markets like Italy, but overall we had very stable volumes in our key markets of Switzerland, Germany, France, England, and also Scandinavia and Eastern Europe. We have in North America, we were maybe slightly disappointed with the recovery of the markets. We saw a big recovery in the residential building sector with a record number of new building permits of plus 25%. Also, we grew accordingly in this segment, but the infrastructure and the industrial building sector were very slow and still negative in 2013. Nevertheless, we at least grew 2% under these circumstances. Then our two growth areas, Asia Pacific and Latin America, with, I think, very convincing results here. Asia Pacific, we had double-digit growth in all the emerging markets, from China to all the markets in Southeast Asia. And we also had growth in the OECD markets of Japan, Korea, Australia, and New Zealand. Latin America, some difficult markets. As you know, Venezuela, Argentina, Brazil is slowing down. Nevertheless, we have very convincing results here in all these markets. When you look at our emerging market strategy, we are well on our way. We grew over 17%, even 11% in Swiss francs, and now we make 2 billion Swiss francs in the emerging markets, which makes 38% of our group sales. We have, when you look at our net sales, I think we are on a very good growth momentum here. When you see the growth of 2012 and 2013, we are quite proud that in these difficult times we can have such momentum. From the operating profit side, you see we have done, I think, our homework. 2012, we had to recover our margins, if you remember. Ended the year with a plus of 86 million Swiss francs in operating profit. And this year we continued with the growth strategy, improved the margins further, and achieved even a plus of 90 million Swiss francs in operating profit. When you look at our new factories, we are extremely proud that our people were able to open 10 new factories in 2013. For the first time, we went into Laos, we went into Iraq, Ukraine. We just opened a factory in June 2013, and in Angola, Africa, we also opened our first factory last year. We have then in other emerging markets, we have already multiple factories. So we opened the third plant in Russia, the fourth plant already in Colombia, second South Africa, the 11th plant in China, second plant in Hanoi, Vietnam, and the second plant in Romania. So you see our business has a lot of potential, a lot of market potential, and we are not only keen to have one factory in these markets. Most markets need more factories than one to cover the full market potential. We have then from the acquisition side, we were very happy that last year we had many opportunities to welcome great companies to join Sika. So it was one of the most active years. We could close Optiroc in Singapore, a producer of cementitious powder and a market leader in Singapore, also with a plant in South Malaysia. We acquired the second biggest acquisition of Sika ever was the building adhesive business of AkzoNobel. They are mainly active in Europe, in the markets of Germany, France, Switzerland, Scandinavia, and Eastern Europe. Radmix, a specialty company for fibers for the concrete business in Australia. We had the opportunity to buy 2 membrane factories in India and Mexico, which are excellent fit for our waterproofing strategy in these markets. And we have one of the greatest companies in Britain, Everbuild, which this year going to make sales of around 100 million Swiss francs, and a professional supplier of the craftsman sector with ceiling bonding and refurbishment products in the UK. So while you were asking last year, the same time, why we acquired so little in 2012, it's always a question of opportunities. So we were happy and lucky to really find great companies who were willing to join us here in 2013. That's my introduction of the highlights, and now I would like to hand over to Adrian to give us more details on the financials.
Good morning, ladies and gentlemen. Also a warm welcome from my side. I'm very happy to present you now the full year results 2013, which show improvement in all areas. I will now address those specifically. If we look at our sales growth in 2013, it shows a very balanced picture. Organic growth of 5.9%, or in absolute terms 285 million, was complemented by an acquisition growth component of 3.5%, or 169 million. Negative currency translation effects amounted to minus 141 million, or a negative 2.9%, effectively reducing our constant currency growth of 9.4% to 6.5% in Swiss francs. In looking at the quarterly growth, we can clearly see an accelerating growth momentum throughout the year. Q1 was even slightly negative. This was largely due to very harsh weather conditions in the first quarter in Europe and in North America, but also influenced by the public holiday pattern. So we effectively have to look at the first 2 quarters in combination, but even then, at 4% growth, there was a clear acceleration throughout the year. Not only organically, but very specifically also from an acquisition point of view, where particularly in the fourth quarter, there was almost a 10% contribution from acquisitions. It was a very strong quarter, also organically, which basically means that for this year, this quarter will be very tough to beat. If we look at the overall growth, this was really very broad-based. All regions contributed. We achieved, once again, a very strong organic growth in constant currencies in the Asia-Pacific and the Latin America region, with 15.1% and 12.7% respectively. The largest region, EMEA, contributed 8.5% growth, whereas North America contributed 2.3%. While we grew organically in all the regions, the acquisition effect and the foreign exchange impact differed considerably from region to region. Region EMEA showed the biggest acquisition impact with 6.4%, whereas APAC and Latin America had quite a negative foreign exchange impact of -8% to -9%. Acquisition contribution here was relatively small in the case of Asia Pacific and a modest 3% in Latin America. If we look at our share of the emerging markets, this increased to 38%, up from 37% last year. And the split between the construction area, construction chemicals, and products for industrial applications, roughly an 80-20 split. If we move down one line and look at the margins, we were able to again improve our gross result, our material margins. After the big increase in 2012, we added another 20 basis points to the margin. This in spite of a certain dilution effect from acquisitions. A number of factors did contribute to that performance. It's on the one hand, disciplined pricing, new product introductions and mix management, and also some slight purchasing savings. In looking at the cost development, we can see that non-material cost clearly developed underproportionally compared to sales growth, with a growth of 4.1%, while sales grew at 6.5%. If we look at the individual components, personnel costs were actually slightly negative. These due to a number of factors. First of all, there was a positive translation effect due to the currency effects, the same as on the sales line here on the cost line, works in a positive way. We also did selected structural adjustments in markets where the economic development was not so good, was bad in the last couple of years. This is an ongoing process. And also we had a one-time impact, a one-time positive impact due to the adjustment of the pension conversion rate in the Swiss pension fund, which amounted to a net 16 million. If we look at the other operating expenses and at depreciation, here the development was slightly higher compared to sales growth. This is due to integration and acquisition cost, as well as costs related to the accelerated investment in the supply chain. All in all, this contributed to the strong EBIT performance and the improvement of almost 20% to 523.5 million. If we look at the financial expenses, we had an increase of roughly 8%. Lower interest expense were offset by lower interest income and higher hedging and foreign exchange valuation impacts. The tax rate decreased from 28.6% to 27.7%, essentially leading to a net profit increase of 23.8% to 344.7 million in 2013. Moving to the balance sheet, I also want to highlight a few elements on the balance sheet. If we look at the cash position, we achieved a cash at hand of more than 1 billion. I will address this a little bit later on when I talk about the cash flow statement. Current assets only increased modestly. This is largely driven by the very disciplined net working capital management. The biggest impact which led to an extension of the balance sheet was in non-current assets, largely an increase of intangibles of about 370 million due to the acquisition activity in 2013. This is both goodwill as well as amortizable intangibles. If we move to the other side of the balance sheet, we can see an increase in current liabilities. This is on the one hand driven by higher accounts payable, as well as a change in the maturity of our bonds of a net 50 million. Non-current liabilities increased relatively little. This is in spite of an increase in net bond financing of 100 million, but also affected by lower pension liabilities. If we look at the equity, this essentially is the net profit minus the dividends we paid in 2013, leading to an extension of the balance sheet of 451.8 million. In spite of this, we were able to increase our return on capital employed to 21%, up from 18.5% in 2012. Talking about net working capital, in 2013, we were again able to lower our net working capital to 889 million at year-end 2013. This is 17.3% as a percentage of sales. This was partially positively affected or impacted by foreign exchange translation, but even without this effect, as you can see at the bottom end of the chart, at constant exchange rates, we were able to continue the positive trend of net working capital reduction in the last few years. This leads me to the cash flow statement. Cash flow from operating activities increased very strongly by about 147 million. This, again, is driven by increased profitability as well as the disciplined net working capital management. Cash flow from investing activities, which works the other way, also increased very strongly. This is largely driven by our acquisition activities. Acquisition spend was 411 million, as well as a net capital expenditure of 141 million. This leads to a free cash flow of 19 million, which essentially means that we were able to finance all our investment and acquisition activities from operating activities in 2013. If we're adding the financing component here, which is a net increase in bond financing less the dividends, we added another 23.9 million to overall cash, and with the exchange difference of roughly 9 million, we had an increase of cash, an increase in liquid funds of 34 million in 2013. Concluding my remarks on the financial results, I would like to show you the 5-year overview of net profit development. Similarly to EBIT development, a strong increase by about 60% in the last 2 years. And even more so if we look at operating free cash flow, more than doubling the amount in 2011 and also higher in absolute value compared to year 2009. This brings me to the dividend proposal. The board of directors proposes another increase in dividend by 6 Swiss francs per bearer share to 57 per share, up from 51 francs per share. And for the registered shares, an increase of 1 Swiss franc to 9.5 Swiss francs. With this, I conclude my remarks on the result and hand back to our CEO for the strategy and the outlook.
Ladies and gentlemen, besides all the initiatives which you have seen in new factories, new products, and market expansion, we took time in 2013 to develop and define our strategy 2018. This is quite a process in Sika. We're not doing this only top down, maybe like other people are doing this. We strongly do this from the bottom up, as Sika has a very decentralized management style. We also do the strategy bottom up and top down. So we have this strategy I present to you is not only the headquarters strategy, but you will find this strategy in all our countries and is based basically on all the country plans where we are active. First of all, we believe in Sika we are active in very attractive industry and very attractive markets. When you look at the overall picture, as we define the markets in our 7 target markets, from concrete, waterproofing to roofing, flooring, ceiling bonding, refurbishment, and then our industry business. You see the numbers. Currently, we believe these markets are 60 billion Swiss francs big compared to our sales of 5.14 billion Swiss francs. This gives us a market share of maybe between 8 to 9%. So there is plenty of room for us to grow. And you see the development for 2018. We believe our markets will grow an average 3% each year for the next 5 years. There are some mega trends behind this development in the markets, which are very favorable for Sika, and I'm very happy to show that and share that with you. First of all is the growing demand for Sika products based on urbanization and mega cities. I think we hear this every day, that the world population is growing at quite a rapid pace, not only in Switzerland, but also in all other markets around the globe. What is even more exciting for us is that this growth takes place not on the countryside, but in the cities. So we see bigger cities, more cities, and we see the so-called mega cities. This is very exciting for us because the bigger the city, the more Sika products you need to use. Why? Because you have the high-rise buildings. The high-rise building needs a totally higher concrete quality compared to low-rise housing. So if you want to build high-rise buildings, you need very high specification on your concrete, and we are of course very happy to support this with our products. At the same time, all these mega cities or the high-rise buildings, they have flat roofs. Our roofing and waterproofing products, they are for flat roofs. We are not a tile manufacturer for the pitched roofs. We do our membranes, and our liquid PU and acrylic products are for flat roofs, and you can imagine that this city trend is a huge driver of our product demand for our products. At the same time, you also build wherever you have space and land. You're not concerned so much with water in the ground like we were before. So you build these high-rise buildings, they go very deep in the ground, and they are also built in areas where you wouldn't build before in the past. So you need plenty of good waterproofing to make these buildings happening. Then of course all these buildings, the standards for safety, for fire standards, also for earthquake resistant, as you can read in the media, is increasing year by year, and you need solid Sika adhesives and bonding products to make this happening in the buildings. Last but not least, these mega cities have a totally different demand and higher demand for infrastructure. What does it mean? You need subways, you need these special highways, elevated highways. You really have to invest totally different in the infrastructure to keep these cities running. And you can imagine all these infrastructure projects, from subways to bridges to high-rise highways, they need factor 10 times Sika products compared to regular building for infrastructure, maybe on the countryside. So we are very excited about the urbanization and the mega cities, and believe we can play an important role here for the future of these cities. When we go to another leg of Sika in the motor vehicle industry, you see the trend for lighter cars, for electrical cars, for saver cars. We have that in the newspaper every day. And one key trend behind this is that these cars are using new materials. You all read about the BMW i3. That's the first mass vehicle built completely out of carbon fiber. And this carbon fiber cannot be welded anymore like the traditional steel body of a car. It has to be bonded. And they're using large amounts of adhesives, as you can imagine, to really bond all these different carbon fiber parts together. We have different trends also for other materials. The modern car is not a steel car anymore. They use a combination of steel, of high-strength steel, of magnesium, of aluminum, and all these different material mix cannot be welded anymore, has to be bonded. So we have a huge increase of bonding applications in the motor vehicle industry, and we are very confident that this is a very important mega trend for us in the future. We have then the third mega trend, which is increasing the trend for Sika products, is sustainability. We are all aware of that. It's a huge task for everyone. So buildings in the future have to be better isolated, have to be better sealed, and this can be done, of course, with fantastic sealing solutions from Sika. Also the durability and the life cycle concepts for these buildings. You need high quality to make this building last a very long time. You see the gentleman here enjoying the flat roof here in the mega city, and this green roof is only possible because we have a special Sika membrane system underneath which allows to grow plants and grass on the roof. Last but not least, also our products have a big challenge. We want to be, of course, we want to be the front runner with green products. We don't want to harm any user with our products, and we have big developments to have safe chemistry available for the consumer and the applicator. So these are the three mega trends which I want to present to you, which we believe is a strong driver of the future growth. Of course, it doesn't come overnight. The construction industry, the motor vehicle industry is conservative. They have a long planning period, so you will see a positive effect of 1, 2, or 3% each year for our markets, but I think for a very, very long period of time. When you look at the competitive situation, you notice that our industry is still very fragmented. When you look at the construction chemical market, the market is 50 billion Swiss francs big, maybe a little bit bigger. Sika is the largest competitor in this field, the market leader. And if I add the next 4 competitors, total market share is only 26%. So here's also plenty of room for us to consolidate the market and to grow the market. When I look at our position, I think we are in excellent shape, excellent position with our target market concept, which we introduced a year ago on 7 target markets. We are focused with our core competencies of bonding, sealing, damping, reinforcing, and protecting for these 7 target markets to make the right additives for the concrete, provide liquid and membrane solutions for waterproofing, the same for the roofing, to have our epoxy polyurethane floorings for factories, but also for hospitals, for office buildings. We are one of the leading companies in sealing and bonding for construction and for the motor vehicle industry. And last but not least, we offer the right repair and refurbishment solutions in all our application fields. I think this is a good position to be in. Our footprint, I think, is very strong. We are the market leader already in construction chemicals. We are the leader in adhesives, maybe number 2 or number 3 biggest adhesive company in the world. Our focus on innovation has been our history for over 100 years. We have currently over 800 people working in the labs around the world on new products and new product introductions for our customers. And in 2013 alone, they were writing 73 patents. In the emerging markets, we believe we are the first movers. You have seen the list of new factories in these markets in 2013 alone, and we believe here we can further push here and be the market leader clearly in these emerging markets. Our global footprint, we are close to the customer. Already now we operate over 160 factories around the world. We are maybe one of the few companies who really have a global brand, and for sure the strongest brand here globally in the industry. I think one of our key success factors is our company culture. We are a very entrepreneurial driven company. We give a lot of responsibility and empowerment to our people, also especially to our people in the countries. General manager of a country doesn't wait till someone in Switzerland pushes a button. They make their own decisions, and usually they make the right decisions and they move much faster compared to centralized organizations. Last but not least, we have a solid financial position, which gives us the freedom to act also in the future. So we defined our strategy 2018. We call it Building Trust, and we believe the Sika growth model, which we defined, will ensure our long-term success and our profitable growth for the company in the future. We believe we have an excellent position in our 7 target markets. We can provide a full range of solutions to our customers for all these mega projects around the globe. Innovation is the core of our company. This will continue. The acceleration of the emerging markets makes us very confident also for the future growth. And last but not least, we have our Sika spirit, our sets of principles and values, which makes up the entrepreneurial spirit of our company. We have defined these Sika's values and principles for the first time in writing. I think you also have a handout for it, because today is our official launch also of this statement of Sika. If you look at our growth model in 5 points, it's very simple. This is what our 16,290 employees move every day. We want to penetrate the market with our full range from roof to floor. We are doing new buildings, same as refurbishments. You have to imagine we do in markets like Switzerland, US or Germany, maybe 80% of our sales is related to refurbishment, while the emerging markets, 95% is new build. So we have a very good balance from new build to refurbishment. Makes us also, I think, very crisis resistant, because we don't rely on one area only. Our global technology leadership is what really drives the company. Wherever you go in our business, they talk about new products and how to solve the customer problem. Accelerated build-up of emerging markets. We opened 6 new factories in 2012, another 10 factories last year, and for this year we target to open 8 new factories. Acquisitions, we are in a good position. I think we did about 50 acquisitions the last 12 years. Last year we were quite active, maybe one of the most or the most active year in Sika history. Here I think we have a good process and good principles to also create value through these acquisitions. And last but not least, this model only works because we have the people behind. We have people who see themselves as entrepreneurs, who are empowered by us, who get the responsibility to do the job. Our targets 2018. Of course, we will continue our growth strategy. We believe we will achieve 6 to 8% growth annually until 2018. The share of the emerging markets will further increase to somewhere 42 to 45%. From the margin side, we believe that the double-digit EBIT margin we achieved in 2013 is not a one-time event. We believe that we can achieve this now year by year. Same for the operating free cash flow. Important also for us to do our own financing within the group. So also here we target to be above 6% of net sales for the future. And return on capital employed will stay above 20%. And also our A- rating is an important element to be able to be strong and self-sufficient on the finance side. This is my explanation and introduction to the strategy 2018. This strategy is already now implemented in Sika, is based on all country plans, and we are executing already with full force. Now I would like to come to the outlook 2014. We believe in line with the strategy we will see 6 to 8% growth for 2014. We will continue to build up the emerging markets. We have plans for 8 new factories this year, all of them in the emerging markets. For Asia Pacific, we see a continued good situation in China and in Southeast Asia, maybe with the exception of Thailand. We don't know if how the unrest develops, but as we know, this political unrest can go away in Thailand quite fast, but also maybe can be a bigger problem. But overall, we are very confident. We are also confident that we will slightly grow in the OECD countries, in Japan, Korea, and the Pacific area. We believe with the new products which we introduce in these markets that we will also grow in these mature markets. Latin America, I think we'll see a little bit more trouble in 2014 compared to 2013. We have the Venezuela case, we have the Argentina case, We don't know the slowdown in Brazil. I was in Brazil in January this year, I think in the 3rd week, and the people said, normally we don't work very hard until the carnival, which this year is very late in March. And then we have the soccer championship in June, July, and we have the general election in October this year. So we have also some uphill battles in Brazil this year. However, we are confident that overall we will have a double-digit growth again in Latin America, even though the market might be a bit more bumpy compared to 2013. North America, I think it's time now, after we saw a very nice development of the residential building sector, that the industrial and the infrastructure segment will also show some signs of growth in 2014. So hopefully we can achieve a single-digit growth, around 5 to 6% in North America. This would be my expectations at this point in time. Then in EMEA, we had I would say, a better than expected market environment in 2013. And we also believe that this very slow recovery will continue into this year. Plus, we have the growth regions of Africa and the Middle East, where we expect, of course, a bigger growth. On the margin side, we believe we will have rather stable margins with all the little bumps ahead from the exchange rates and also taking all these new factories into operations. We believe that the margin will develop proportionally to the sales growth in 2014. Good. Then I think we are finished with the formal presentation, and we are very happy to answer questions.
So good morning, Michael Roost from Bank and Bellevue. I just have 3 questions, if I may. First one on your guidance for 2014, the 6 to 8% corridor. Is that includes acquisitions, I assume? Then just a question on that, because if my assumptions are right, you'll probably have roughly 5 to 6% positive acquisition effect, assuming everything remains as is currently. And then on top of that, if I then work out the currency impact, which, okay, that should be not quite as heavy as what we saw in 2013, but it'll still be there. It still implies, at least, even if you hit the top end, which is 8%, it still implies a slowdown of your organic growth. Is that, how should I read that? Is that a little bit conservative, or? That's my question there. Then on the second question, on your net working capital, particularly if I look at the breakdown, a lot of that seemed to be focused on payables. Can you maybe give us a little bit more color on that? And then my last question is again on the personnel expenses, which reduced. Now you mentioned the positive impact of 16 million on the pension side. Is there anything else that we need to be aware of? Because even excluding that from the overall number, it seems quite low. Thank you.
All right, I think Adrian can take the last 2 questions. Maybe I like to answer the growth question. I think for the acquisitions, we don't see between 5 to 6%, maybe. I think it will be a little bit lower, the contribution for this year. And the only thing I like you to consider is that we had an amazing second half 2013, especially the last quarter was influenced by the mild winter weather. So if you look at 2014 ahead, I think we will not just maybe be able to match the 4th quarter sales of 2013. So we have this exceptional situation where we were overshooting due to the very mild weather. Okay. Nevertheless, having said this, we are very, very positive. I think we will see a strong first half of the year. However, with all the little bumps ahead in the markets, I think we want to be rather conservative with the sales outlook for the year at such an early occasion.
If I can answer the question on the net working capital, I think we have actually improved the working capital in all areas. It's inventory, receivables, and payables. You also have to take into consideration that the absolute number is added by what we acquired. So there is actually an improvement in all the areas, and we are working on all the elements. This is not only a story about payables.
So you see that as sustainable, the increase in payables?
We see that as sustainable, yes.
Then the personnel?
On the personnel cost side, as I indicated, there is a number of factors which actually influenced the net decrease. Well, the translation, I mean, you have to add if you compare it to the 9% growth. So this was roughly 2.5 or close to 3% as an impact. And then we did some structural adjustments in some markets, in Southern Europe, in other markets, which already started in 2012. So all in all, there was a very disciplined cost management. And in terms of additional people, the increase was in the emerging markets, and rather a decrease in mature markets, of course, at higher salaries.
Thank you. In 2013, several emerging markets have seen a slowdown in growth. How did you manage it to grow so fast in almost all of these countries?
First of all, I think when the crisis talk started in August with the exchange rates and so on, I think it's always very much driven from the financial industry and not from the real economy. That's my personal observation on this. And second, we built these countries up very solid and with local people, so who understand these markets very well and who live in these markets. So we have a very stable and solid situation, maybe compared to other businesses who go in or out with, I don't know, with expats or other people. So, and the facts are supporting what I say. We didn't see a slowdown in our growth for the year end. Also starting off the year, we don't see a slowdown in the emerging markets. We have some hiccups in some markets. You have seen we opened a new factory in the Ukraine last year, so that's slowing down at the moment, of course. But it's also run by local people, so and we have a long-term commitment, and maybe we have a slowdown now till the situation clears, but we will continue to be present in this market.
Thank you. It's Remo Rosenau from Neue Helvetische Bank. Looking a bit more forward on 2018 strategy, if you go to slide 28, you showed that the overall market is around 60 billion. You have about 8 to 9% market share. You say that you have plenty of space to grow. Yeah. However, if you go back, if you do a market segmentation, and you go back about 15 years, you were at that time almost exclusively active in the upper part of the market, in the high quality end of the market. Part of the success of Sika over the last 15 years was that you moved a bit down, into the volume markets, generating strong growth, which initially at least had a negative impact on the margins, but you generated still much higher returns because sales grew over proportionally. Is now the growth strategy 2018 based on a similar concept that you in the quality pyramid you go rather a bit down into the volume markets even more, or do you believe that the quality segment will grow because of urbanization, or is it a combination of both? And at the end of the day, what will be the impact on the margin?
That's a very good observation you have. I think traditionally 10 years or 20 years ago, you always have the market positioning in the pyramid, right? With a rather small premium segment and some mid segment and then very big base segment. If I look at our markets, I think the markets more look like a snowman with a very big belly. And the mid segment of the market is in most markets as big as the lower segment. So I think for our strategy, and you have seen our margins, how we can deliver, it's not so decisive to be somewhere in the top premium segment. You have to make solutions for the volume segments of the market. When we talked about these mega cities, to build such a mega city, we want to be part in every building. We don't want to have some high engineering idea, the roof can only be like this. If the customer wants a liquid applied roof, we have the range for the liquid applied roof. If he wants to have a sauna fill roof, we are happy to provide a sauna fill roof. If he wants to have a green roof, which is the top of the pyramid, we are more than happy to provide the green roof. But I think what we learned in the recent years is that we can not only be successful in the volume segments of the market, we also have good margins in this segment.
Okay. Another one, the last one, you talked about the decentralized management style of Sika. Now, one of the challenges in such a concept is how can you find out which parts you can still centralize, because there are lots of cost savings in there. So how do you find out what you can sensibly centralize in such a sensibly decentralized model? Because that is where you can take out costs also.
That's the excitement of my daily job, to always find out what you give locally. And I would not say centralize, I would say what parts of the business you can globalize and you can share. And this is, first of all, a new product. We're trying to make products which works, of course, in one country, but then the idea is we roll this product out in the region and maybe globally, depending on the market situations. So our constant battle is exactly what you say, local responsibility, and at the same time we have to define global competitive advantages and processes. These are new product developments, this is our Sika brand, this is the know-how to build 10 factories in 1 year, so many areas. And it's a constant, how do we say this, argument in our company, of course. What shall be done locally? What shall be done centrally? What is a global best demonstrated practice? And I like this very much. And this will continue. There's not one solution to it. There's an ongoing battle. And if we do 80% right, we are going to be very successful.
Thank you.
Christian Arnold, Bank Vontobel. I have 2 questions. On the one side, for the outlook 2014, you're guiding 6 to 8% growth, also organic growth included there. But at the same time, you expect margins to remain on the level of 2013, which are high, but remain there. You also commented that it also probably has a reason in the acquisitions in the new factory, which probably will have a negative impact. Nevertheless, that implies no operating leverage, so to say, at least as a result. And I wonder if there are some other negative points here you see. So from the raw material side, do you expect a negative impact from the raw material side? Do you expect a negative impact from product mix, more concrete products versus industrial products, I should say. So maybe if you can comment on that. And then the second question would be on the long term, on your strategy 2018, where you somewhat lowered your growth target from 8 to 10 in the past to 6 to 8 going forward, which of course probably is also has to be seen in combination with the absolute size of Sika. Sika today is different from Sika some years ago. Nevertheless, I wonder if you see some other impacts there, if it's more difficult for you to do acquisitions, if the overall market is growing slower than in the past, if you can comment on that. Thank you.
I think for the margins, we see a stable situation on the raw material pricing. I mean, can change every day. If the Ukraine comes into war, we already had a small impact on the crude oil price, but nevertheless, we expect a stable situation on the raw materials. For the margins, let's say we are a bit conservative at this point because the new factories which came into operation last year, which come into operation this year, they will not be able to make a big contribution to the bottom line in 2014. The acquisitions, I think they are well ahead of plan in the integration. Also here we have 1-2 issues which will burden the margin a bit. So I think it's a very solid comment at this point to say we are very confident to achieve the same EBIT margin as in 2013. Regarding the outlook of the strategy, I think I thought you're gonna push us with the old 8 to 10%, which I think was defined back in 2005 or 2006, and then if you see the course of time since in the past 8 or 9 years, that was really a target which could not hardly be achieved in every year. So we took a serious review, and we believe 6 to 8% is still quite a statement and a good growth strategy for us going forward.
Thank you. Maybe just a follow-up for 2014 in terms of pricing. What do you expect for your pricing? Can you increase your prices?
This is, we have long-term partnerships with our customers. Usually when we make a building, it's a 2 to 4 year project, and usually the people we deal with at the building, or also in the car industry, we work lifelong with these partners. So at Sika, we don't believe in very drastic and very rapid increases in sales price, because we have partnerships with our customers. So for 2014, I think it's a solid position. We've done our homework in 2012 and going into 2013. We are, I think, on a good level at the moment. But of course, we have so many articles in every country. There's always pricing is an ongoing issue in the company, of course.
Bernd Pommerin from MainFirst. Sorry if I again come back to the 2018 targets. In the last 10 years, you achieved an average local currency growth of above 9%. Last year, you achieved a local currency growth of above 9%. What now really has made you becoming more cautious on the 2018 targets? Is it the organic growth component, or do you see less acquisitions going forward?
Well, I think, when you see this growth rate, we had quite some significant acquisitions in there, like Sanafil at the end of 2005, and also other acquisitions. We believe in the long run, we want to focus very much on organic growth and innovation. This should be around 2/3 of growth, roughly, and about 1/3 will come from acquisitions. And then again, we can argue a lot about 9% or 6 to 8%. I think we made a very good and positive statement with 6 to 8. And as the road is a bit bumpy ahead, I think it would be not wise to make any other statements.
Okay, thank you. And maybe one add-on question. Is it possible to quantify the integration or restructuring costs either, or maybe both, for last year and for this year? Thank you.
Of course it's possible, but at Sika we don't really believe in making all these adjusted EBIT numbers and everything. We believe our company has to look for the short term, but even more for the long term. So if you see all our investments last year, the acquisition is clear. They didn't contribute to the result in 2013. Nevertheless, we had a strong result. And we don't want to come in a situation like I see in many cases where we make adjusted EBIT. And so I think our shareholders expect a long-term strategy and solid return numbers each year without making up any story.
Okay, thank you.
Philippe Ray from l'AGFI. Where will you open new plants in 2014? And you have opened one, for example, in Angola on last November. And which potential do you see on the longer term in Africa?
All right, we are very excited about Africa. We finalized in 2013, together with our strategy, we defined the Africa strategy, where at the moment we have 8 factories in Africa, and we have now a plan to increase this number significantly over the next 2 to 3 years. So at the moment we are present in North Africa, we are in Morocco, we are in Tunis, Algeria, Egypt. We have 2 plants in South Africa, 1 in Kenya and 1 in Angola. And as you know, there are so many attractive markets in Africa, and we want to grow there now aggressively. We see Africa a little bit like the new Southeast Asia or something. So we want to be present and accelerate our growth.
Martin Hüsler, Zürcher Kantonalbank. I have two questions. First one to Latin America, where you showed a good growth, but when I calculate correctly, margin came down there. Can you give some reasons there? Is there still a transaction impact so that you have higher sales growth than local costs?
Yeah.
And if this is the case, what is about the difference between share of local costs and share of local sales? And the other question turns to your new guidance or targets. I was just wondering why you changed from an EBITDA target to an EBIT target. Thank you.
All right. I take the second one, and then Adrian takes the first question.
I'll go with the first one.
No, I take the first one. You take the second one. Sorry. I think the EBITDA is very clear. We believe that we are in a very low capital intense industry. As you see, even we make 10 factories, our investments is a bit over 150 million Swiss francs. So this is very exciting for us and very exciting for our growth strategy. That's why we believe we should rather focus on the bottom result and not make some EBITDA which doesn't make a big difference in our case.
Your question on Latin America, I think first statement, we have very, very solid margins in Latin America still. I mean, they have come down a bit. This is clear, and there was indeed some impact, let's say, currency related, due to the fact that a lot of the raw materials in Latin America are either purchased in dollars or in other currency, and some other impacts on the currency side, which gave a bit of a dent on the margin. So on the raw material side, there is quite a share of, let's say, foreign denominated cost. On the operating expenses, most of it is local. So it's not a huge impact, but this year, combined with some of the hotspots that were mentioned before, Venezuela and Argentina, that just had an impact on the overall efficiency.
Dominic Meyer, Bank Vontobel. I have actually two questions. The first one is again with regard to growth. An important factor or driver for you is the structural growth. For example, the new application changes from welding to bonding. Can you maybe give some indication what the contribution is of structural growth in the past and going forward? And then second question, could you also give some guidance on CapEx, split up in maintenance and expansion CapEx?
All right. I think structural growth is not so easy to always differentiate, because every product which we develop is normally a better product with enhanced performance for the customer. So then you don't know, is it now a structural growth because the adhesive to bond the car or the adhesive to make the new high-strength concrete, is this then a structural growth or not? So it's quite difficult for me to answer the question. But I think, as I pointed out, we have plenty of room for this structural growth because of these three mega trends which I presented. We need to have better solutions in the future. So, but difficult to answer this structural growth question, because I think most of our new products are related to enhanced performance.
Just if you give a range, is it 1/3, is it 1/5, or?
Very hard to say. I would really say you can go a bit with the market, what I said, maybe these mega trends, they lead to 2 to 3% growth each year. So maybe it's 50-50 or something, or maybe it's around this for our organic growth rate. The second question was with the investments. I think we made a lot of improvement in Sika in the past 2 years to standardize our investment process and to make to specify the equipment used in a better way. So we lowered the necessary investment very significantly. This is why I think we have quite a reasonable investment number for 2013, and I believe it will maintain on that level.
Okay, so flat, overall flat they split up in maintenance and this.
We see, all right, so we go from 6 factories in 12 to 10 in 13 to maybe 8 factories in 14, and then a lot depends, of course, on the market dynamics. So 15, I cannot tell. 15, I still expect we're going to have 6 to 8 new factories in the emerging markets. So we, of course, try to focus on new investments rather than maintenance. But it will keep around the similar levels like we showed now the past 2 years, I would think.
Johannes Borner, Santo Invest. I would like to ask a question on the supply side. So on your suppliers, can you make some comments what the situation currently is there in terms of how much they try to increase the prices, how much capacity is around, and how much you on your side still can optimize the purchasing situation, be it centralized or more reasonable, or package, or switch supplier, just to get a feeling a bit how this will develop going into 2014.
The question, they always try to increase the price. The question is, are they able to? We are quite confident that 2014 we will see a flat development. We have certain factors pushing it. I think the load capacity in the chemical raw material industry is not very good at this point. So even with high oil prices, the ability to increase prices is, I think, limited for them. On the other hand, what we drive very much in Sika is that we do global sourcing of raw materials, something we didn't do really 10 years ago. But now with all our push into China, into Korea, Japan, also into Latin America, we of course source more and more raw materials locally, which gives us a bit of leverage against the big suppliers.
And maybe second question on the gross margin side, can you give us a feeling what pricing on your side were in 2013, or what, at least if you don't want to comment on pricing, at least what the mixed price effect, which was a positive one as I understood, was in 2013 on gross margin?
We had a slightly positive pricing effect in 2013. So the actions which we took in 2012 to bring the margins back up, they also went through into 2013.
Patrick Appenzeller, Helvea Bader Bank. I have questions related to growth and margins again, but these are this time rather on a short-term view. You mentioned the tough comparison you might face in the second half, but on the other hand, you will face a very favorable comparison in the first year. I mean, we have now an extremely mild winter against a very cold winter last year in Europe, which still is most important for you, and the US might be similar, but overall must be quite a significant impact, especially on the first quarter. We also will have the Easter shift in the Eastern, which will impact Q1 and Q2. And on the margin side, you had in the fourth quarter 13% EBIT margin, which was the highest ever achieved in the fourth quarter, which is seasonally low, and this time seemed to have almost no season impact. So from this 13%, it's hard to believe that you will go, let's say, be at least or to be stable in the first half year with 13%. So I would assume that in the first half year, it's quite a very positive momentum. Don't forget the floodings in the second half, which also will provide a likely positive comparison.
No, I fully agree with you. I think we're going to see a solid first half. I think we will see even a very, very good growth in the first quarter with everything you said, and with the good weather conditions. We have a good momentum in the first quarter, of course. However, as you mentioned, the fourth quarter 2013 was very exceptional, and if you ask me today if I can be flat in the fourth quarter, I will sign today for the same sales volume. So you see, we have to make all growth in 2014. We need to make in the first 3 quarters. Fourth quarter I don't think we will be able to grow.
Is there any indication so far in the year you can give us?
For
get a feeling about this impact of the weather in the first quarter, so in the first 2 months? Is there any flavor you can give us here?
Hey, it's very warm out there, you know. So it's you see building activities everywhere, and you see me also with a smile on the face. So I think we're gonna have a very good start of the year. But please don't overestimate this. You know, if we talk again in April, and I don't know the results yet, but if we have very positive sales, don't overestimate. We will have more difficulties in the second half.
Mark Possa, VV Vermögensverwaltung. A very simple question. You still have many companies, especially in Arabia and China and emerging markets as such, where you don't own 100%. Is it the target to go up to 100 to really fully consolidate them, or what is your strategy in that context? And what impact could that have on the top line growth?
I think traditionally we are someone who wants to own the company. You see this, except for the Middle East, where we have a joint venture partner for many, many years. Normally we own the company. In China, I think it's only 1 or 2 companies, where we have the majority share. And in Japan, we have a 50-50 joint venture for the automotive industry. So we only do joint ventures, I think, in very exceptional cases. We believe with our growth model in Sika, especially with our company culture, it's better to own the company 100%.
And maybe a second question concerning the innovation. You mentioned the 73 patents that you won last year. How does that compare with the past? And do you plan, is that going to be the decisive competitive advantage in a still very fragmented markets where smaller companies do not have the power to really come up with the same innovation grade?
I believe so. I think the patent is really something we started on a professional level maybe just 10 or 12 years ago. And the 73 patents, I think, is about the same level as the year before, but there was a big increase in patents, of course, over the last 10 years. We believe it's going to be a very strong competitive advantage in the future. Today, in the chemical industry, half of the patents are written in China. And despite many discussions about patent protection in China, they are the ones writing the patents. So to protect your company's future, I think in our industry, you have to have patents in the future.
If I may, just last question concerning the market structure in 2018 or maybe some years down the road. You mentioned the top 5 players have a quarter of the market. How is that going to look like then? And how many smaller competitors will have to disappear due to the lack of economies of scale and other factors?
I don't want to comment on the other competitors. I don't know what they are going to do. I think we're going to move along. We're going to be the strongest company in 2018. I would expect maybe we're going to have a Chinese company entering this top 5 circle. Is possible. We don't see it at the moment, but it's possible within 5 years we have a strong emerging competitor from China.
And there is no pressure from like backwards integration or forward integration of some of your content providers, i.e. chemical companies that try to move into a Sika direction.
I think you are a better judge of this. You see that some of the chemical raw material suppliers are doing attempts or trying to go into the front end of the market. I think you do the analysis. They are not that strong at this point. I don't think they're going to be a threat to us in the future.
I'm asking about 2018 goals. In the past, Sika has been very well keeping up volumes during a recession, relatively speaking, but the margin has been every time very hard hit. And if I look out to 2018, I see, I would wonder if there isn't a recession. So if there is one, then to have a 10% margin, you have to move up to 13 in order to come back to 10. Is that about the picture that you're envisioning, that you 15, 16, 17, you can go up with margins, and then one year you'll have a recession, you just fall down on the 10% but not below? Or what does that mean, that 10%?
Well, it's obviously it's a tough promise to say we're going to make 10% EBIT margin. I'm not so negative on the recession. I think if you enter into recession, normally, especially your input cost will be largely decreasing. So I think we have a very good counterbalance in recessions for gross margin. And so I don't think we go to 13 with the EBIT margin. I think we are very stable in the range of 10, and also if the markets are not so good.
But you have always lost on the EBIT margin 2 to 3% during a recession.
But maybe for other reasons. I wasn't the CEO back then, you know, so I have a hard time to comment really. I think we have a very stable situation. Even when you look at the recessions, even in the toughest year, 2009, we only lost, I think, 9% sales or something, because we have such a solid model from new build to refurbishment, and in all markets active globally. So I think we have actually a very good protection against crisis.
But some of the effect we will see, you go a bit higher and then you fall back to a recession. No?
I couldn't see that in my presentation that we go higher. I have to check with Adrian later what he's planning, but I know, honestly, I think we made quite a commitment to say we do double-digit EBIT margins, to be honest. This is, I think, only the second time we've done that, 2007 and 2013, and we are confident we can keep up this new level. So don't push me in the sky now. Yeah.
Mark Schultes, Zürcher Kantonalbank. I have also a question on the expansion capex. In 2013, you also used your balance sheet for the expansion, so net debt and gearing going slightly up. What's the levels you will defend so you can maintain your A- rating with the rating agencies?
There is, I mean, there is certainly some more room if needed. But as you have seen, I mean, we had a very strong cash flow, and so this will be sufficient also in future to fund our capex.
Okay. But this year we actually saw free cash flow after dividends negative. So you would propose for the next 2 years this could also be possible?
I mean, there is some time effect as well. There will be a bond repayment in June next year, and we will always decide then on a case-by-case basis whether additional financing is needed, depending on the acquisition pipeline and other elements.
Yeah, good. All right, thank you very much. We have no more questions. And thank you so much for coming, and I think we can continue the discussions outside with some drinks and snacks. Yeah, thank you very much.